First is money is needed at every level, be it a new startup or even a grown-up company, whichever term you use it, be it angel capital, venture capital, private equity, whichever nomenclature you use, but money is needed at every level. So whatever company that you are coming out should be prepared and should be planned in a strategic perspective, that it's not just one-time scenario, it's an ongoing series kind of scenario. So you have to keep maintaining your credibility angle and your marketing ability and etc. at every stage that you get, because otherwise you may get series A, series B, 1 or 2 rounds, but after that, let's say your credibility factor disappeared in the market, and by that time you need one more round even to sustain, but you don't have that fund, then your company can disappear. So it's not a one-time scenario, it's a long-run process. So you should have that kind of vision. These days, lots of new instruments are coming, say convertible instruments, be it convertible preferreds, convertible bonds, convertible debentures, linked to your performance. If you don't perform, then logically they will not exercise the conversion right, so they will remain the bond holders. So you have to repay the loan. So that's where your whatever claims that you are claiming at the time of you are going and making your presentation to private equity funds, you have to be careful, because many entrepreneurs have a habit to go and aggressively market their company. We will grow 5 times revenue, 10 times profit. That this private equity fund will say that's all fine. I mean, we appreciate and we wish you all the best. But neither we are doubting you nor we are supporting you, but we are just investing in a convertible bond. In the sense, if you achieve whatever you claim, we will convert into equity. Otherwise, you repay us. As simple as that. So you should be careful in while going and making your pitch, so that you will not get trapped into whatever statements that you yourself made. These are some large deals. Let's not spend too much time, but there are some $1 billion plus deals happening in the last 5-6 years. So India is well into the $1 billion club of global private equity. The preferred route of which used to be IPO, that means after they invest, any fund invested in your company, they will expect that in 4 or 5 years your company should go for exit, and preferably IPO, so that the private equity fund will sell their shares in the open market, so that they will get their shares from they will make their money there and then move on. But now, considering that IPO market has become very sluggish and almost it's hardly any IPO deals are happening, so now the other scenarios are emerging, like trade sale, strategic sale. That means one private equity fund will sell their shares to another private equity fund or another strategic investor, because IPO is not happening. So exit through non-IPO routes. So that is picking up. If both didn't materialize, that is neither IPO nor trade sale, then eventually that boils down to buyback by the promoter. So it has its own challenges, and even though you can write it in the shareholders agreement, sometimes it becomes very difficult to implement from the legal point of view, because there can be lots of ifs and buts in the process. So that can lead to a lot of litigation issues. I think the fund managers who are handling, I think probably they will give more hands-on experience about this exit side of it. And another big problem that I am finding these days in the Indian entrepreneurs is that they are unable to differentiate between their hobby and a business, because they are getting carried away. People are mistaking their hobbies into their businesses, which they should do in the weekends. They are trying to do throughout the week. So then new budget initiatives, very quickly, 2-3 points. One is the SMEs are permitted to come into the SME exchange without doing the IPO. I think must compliment government, no question about that. It will open up opportunity for the SMEs to go and straight away do without going through the grilling process of SEBI, NSE, BSE, clearance, etc. But only one point that you should remember: if you have to list yourself in SME exchange, most welcome, but you should be able to find one merchant banker in the market who is ready to do hard underwriting on you. Means what? To put in very simple English terms, if your IPO size is 10 crore rupees, if issue doesn't get subscription, then there should be one merchant banker who will say, if the issue doesn't get subscribed, I will fill in the gap. But your ability in getting that merchant banker is the real obstacle. And second one is, angel investors are recognized into the new AI of category 1 VC funds. That's also a welcome move. And the thirdly, very interesting move, I think I'm sure the third one straight from the table of Raghuram Rajan. I think Raghuram Rajan, since he became the advisor to the Prime Minister, you can see his influence on the thought process. That's very welcome. He said that whatever 2% CSR that's the companies are being obligated now to do, 2% of the profit as CSR, if the companies spend that money in the incubation centers, in the approved education institutions, that will be considered into the definition of 2% CSR. Very welcome. I think let's hope that whatever the companies are spending into the CSR will lead to create much bigger companies, much bigger innovative companies. I think I think that shows probably the global perspective of Mr. Raghuram Rajan. I think compliment to him.